Hello students, my name is Jesse George, your professional accounting teacher. Before you continue with this video, please subscribe to my YouTube channel, Georgian Theory Concepts. Thank you. Now let's get started. In this video, we are going to consider the concept of accounting treatment on dissolution of partnership. Okay, when a partnership comes to an end, how do you account for it? That's what we're about to do. All right. Now, to account for this, there are three important accounts we are going to prepare. To do this, there are three important accounts. Number one is realization account. Number two, partners capital account. And number three, the cash account. So these are the three important accounts to be opened upon dissolution of partnership. So these three accounts are very, very important. So let me use, now this account is for advanced financial accounting, and which means that the students is required to have known the basis of partnership accounts. Okay, that is the assumption. All right, so let me bring a question to illustrate, a simple question to illustrate the dissolution of partnership accounts. All right, now look at this simple illustration. You can pause your video and write out this question so that you follow what we are doing. Jaguda and Odano are in partnership, sharing profit 5/8 and 3/8 respectively. They agree to dissolve partnership, and their balance sheets at the date of dissolution is given. Okay, this is the balance sheet, the capital part and the asset side. Then by December 31st, 2010, the dissolution was complete and the assets other than cash were sold and realized for this amount. Close the books of the firm. Now, to close the book of the firm, the first thing, you draw your realization accounts. All right. So, like I said, these are the three accounts: the realization accounts, the partnership account, partners capital account, and the cash accounts. Okay, let's get started. Like I always advise, you start with the additional information before you come to the main accounts. All right, so let's start with the additional information. They said by December 31st, 2010, the dissolution was complete and the assets other than cash were sold and realized for this amount. Okay, and realized for this amount. Now, when assets is sold, okay, when the asset is sold, the asset of the partnership firm that you are dissolving, when it is sold, you will receive cash. Okay, if cash is received, you come to cash account. Just leave a line here and come here and say assets realized. That is the cash. How much? That is 225. Then you go to you credit the realization accounts. Just leave a line and come here and say cash realized 2 to 500. Okay, I think that one has been done. Now, in this question, we are not giving the dissolution expenses. I don't think we are giving the dissolution expenses. Okay, so the question does not give dissolution. I didn't mean that it's dissolution expenses. Would have credited the cash and debit the realization account. So the question does not give. So there is no other information. So this question is just to demonstrate what to do. It's very simple. Now, you can first come to the capital side of the balance sheet. This is the balance sheet that's what we call the statement of financial position. Okay. Now, come to the capital side. You pick the item one after the other. 1, 2. This is the balances of the capital account. Then you come to this place and write balance brought down. Okay. So we have 7500. Then for Odano is a 65,000, okay? Then you need to pay the creditor. You need to pay the creditor. So how do you pay the creditor? You will credit cash. Just take this to the cash account. You pay the creditor. So we have creditor 75,000. So you credit the cash account when to pay the creditor. So this question is very, very simple. So we are done with all this. Then you come to the asset side of the balance sheet. Then there are two ways you can do it. You will add the premises, the stock, the debtors. Just add them together and move them to the debit side of the realization account. Okay, for you to understand, let me just pick them one after the other. Premises, and don't forget, no asset is taken over by either partner. Okay, so the question does not tell us. So in this case, all this asset has been sold out, and this is the total amount. So the book value now will be moved to the realization account. So we have for premises 60,000. Then for stock we have 70,000. Then debtors we have 55,000. Okay. Then the cash balance. Then you come to your cash account. We have balance. Can you now see why I said you should leave a line? Balance brought forward, and that is 30,000. Okay. All right. So having done that, we make sure that all this has been done. Now, the next thing to do is to start with the realization account. You need to calculate the share of profits. So from the look of things, you will see that this side is more than this side. The credit side is more than the debit side. So we now calculate the share of profit. The share of profits. And don't forget, the partners are to share, their profit sharing ratio is 5 all over 8 and 3 all over 8. So let us do the sharing. Let's do the sharing. So to share, now what is the difference? Of course, the difference here, okay. So when you have 500,000, then we have 500,000. Now the difference is 40,000. So when you calculate this, just subtract it from the debit side. You are going to have a difference of 40,000. So we have Jaguda, which is 5 all over 8 multiplied by 40,000, and that is 25,000. Then we also have Odano. Odano takes 3 over 8. That's their profit sharing ratio. The profit sharing ratio is 5 over 8, 3 over 8. So when you multiply this, and this gives 15,000. So immediately you will credit their their capital account. So you credit this to the capital account. You say share of share of profit, and that is 25,000. Then 15,000 goes to this man. Okay. Then the partners need to be balanced. So we need to balance the partners. So let us balance them. It means that you have to pay them off cash. So let us add this. Let us add. So when you add this, of course, this is 100,000. So we have this man will take Jaguda will take 100,000. Then you credit your cash. So we have capital accounts, look at the cash. Capital account, we have Jaguda. We take 100,000. Then we need to balance this, and this will give, of course, 80,000. So you come here, you write your 80,000. Then you close up the accounts. 100,000, 80,000. Okay? Then Jaguda, then we have Odano. Odano takes the 80,000. All right? Now we need to balance this and see whether our cash will balance. So by the time you add this, it's going to give you nothing but 22500. Okay? When you add this, it's going to give you, so this is 255. Then this is 255. Yeah, our account is balanced. So the books of the partnership has been closed. Okay, so this is just a simple illustration to tell you what to do when we have a dissolution of partnership. Hope you understand this. If you do, please share with your friends. Thank you.